I think we're ready to go. Welcome everyone to our inaugural episode of Eye on Privacy with TRU Staffing Partners. It is wonderful to have you all here, and we're very grateful you chose to join us this afternoon. I'm Jess Barre. I am the Senior Vice President of Recruitment, and I am joined by my colleagues Sarah and Jared, who I will allow to introduce themselves in a moment. But thank you for joining us. This is, like I said, our inaugural episode of what's going to be a monthly webinar series designed to keep everyone abreast of what's happening in the privacy marketplace. Every month is going to be a different set of faces. Some will be internal with folks inside the TRU team, like it is today. Some will be external with special guests with different areas of discipline. But all designed around keeping abreast of the privacy community and the privacy job market. So today, my lovely co-host is Sarah Roberts. Why don't you introduce yourself?
Thank you, Jess. My name's Sarah Roberts. I am also an SVP of Recruitment and Account Management here at TRU and work with Jess to head up our privacy recruitment efforts, and excited to be here and excited to meet some new people and be part of this monthly webinar. Jared?
Awesome. Yeah, and we're interviewing our founder and CEO today, Jared Coseglia. Take it away, Jared.
Hey, everybody. So we're so excited to do Eye on Privacy for you, and we're going to dive into the data in just a second. And one of the things that we're really excited about is giving the community more real-time data points on what's actually happening out there in the industry. And here are some of those real-time data points that we're going to provide everybody month over month, a few of which we'll get into today, although we're going to talk a little more big picture about 2023, a year in review, and what really happened in 2023, maybe in opposition to what happened in 2022, which was a very different year for, I think, everybody. Economically, and certainly in terms of the staffing opportunities available out there. But here's what we're going to talk about, and here's what we track as a business. One of the things that makes our organization really unique is we're really committed to tracking, defining, analyzing, and predicting the behavior of the data privacy job market. And we've been really successful in doing so for more than half a decade now. And so we want to bring all these metrics to you in real time to improve your hiring and job seeking process. So first thing that's on everybody's mind is, what are the remote versus in-office trends? And that includes both who's actually getting hired into jobs and what are those jobs allowing in terms of those permissions. We're tracking all of that, but we're also tracking, what do people request and when do they change their mind, both from the job seeker and the hiring authority perspective. Meaning, people start their job search saying you got to be in an office 4 days a week, but they end the search hiring somebody that only has to be in once a quarter. So what happened along the way, and why are things like that trending, and when? And so we're going to unpack a lot of those things over the course of these webinars every month. Speed of hire is something we think is really important, because the biggest and most dynamic change post-pandemic was the speed at which we hire talent and the speed in which job searches are performed. What would typically take at an executive level before the pandemic anywhere between 3 and 9 months now takes about 90 days. So things are infinitely faster. We're tracking at different levels based on position and titling and leveling, how fast the speed of hire is for, say, privacy engineers versus analysts versus program managers versus attorneys versus partners versus associates versus a counsel. So we're tracking all of these different speeds of hire from the time a resume is sent to the time somebody verbally accepts an offer, and we're going to show you what that data tells us about the behavior of the job market. Point of hire compensation is probably what everybody's most interested in. We know that there are a lot of different salary surveys out there. We've sponsored the IAPP salary survey from 2021 and 2022. And boy, were those years very different than what's happening right now and what happened in 2023. And so if you're looking to calibrate your hiring process or expectation setting, either managing up or managing down based on 21 and 22 numbers, there's a different reality happening right now. So that information really serves as a wonderful, rich, historical data point. Our data is going to tell you what's happening right now so that you can recalibrate. And the reality is things change on a month-to-month basis in data privacy in the market, and certainly can change dramatically from quarter to quarter and very dramatically from year to year. Offer acceptance likelihood, just so everybody understands what that means, that is what's the likelihood a candidate is going to accept your offer if it's the first offer they receive versus the second offer they receive versus the third offer they receive. And we'll show a lot of this data over the course of the next year. But one thing to think about is in 2022, we found that if you were the first offer a candidate received, if you're an employer that extends the first offer, you only had about a 45% likelihood that the candidate was going to say yes. So less than 50%. If you flash forward from Q2 of 2022 in the height of the pandemic staffing madness, a year later into Q2 2023, that statistic jumps to almost 80%. Meaning if you were the first offer a candidate got, they were likely going to grab it. What a dramatic change in the behavior of job seekers. And the reason why we track these things is to give our hiring managers competitive advantage by saying, listen, our statistics tell us that if you are the first, if your speed of hire is the fastest, and you're the first offer a candidate receives, the likelihood of acceptance accelerates exponentially for you. So be fast, be deliberate in your hiring process, and you're more likely to get acceptances. And then we unpack how you do that. How do you stay fast? Contract staffing is going to be a huge trend, and we are going to show you some very detailed statistics on the contract staffing versus full-time hiring trends over the last 6 or 7 years. I think we walked it all the way back to 2016 or 17, so you could see the trends that took us through GDPR and then through the pandemic of 2020 and then into the economic boom after and then into the rapid decline afterwards. One of the things, if you've seen our How to Get Budget and Buy-in webinar, which you can rewatch on YouTube or online, is that the privacy job market kind of has a pendulum swing of growth and recess every 2 years. And right now we're in the last bit of the recessive part of it, right? 21 and 22 were huge swings of growth. The IEPP salary survey says the average person got a 7% raise, a 10% raise over those 2 years, which is astronomical just in terms of what year over year raises look like. Our data tells us that if you changed jobs in 21 or 22, you likely got anywhere from a 20 to 40% increase in base compensation. That shows you just how inflated salaries did get during the height of inflation post-pandemic. And then that pendulum has swung right back when the NASDAQ crashed in Q4 of 2022. And now we're on like the last few quarters of what we anticipate will be the end. And we're already seeing the pendulum starting to swing back in the other direction as compared to 2023. The biggest trend out of that, though, is the contract and the amount of contractors that are hired or contract to hire versus direct hires is starting to now ebb and flow with a dynamicness that is healthy for our ecosystem, but also provides a volume of alternative options for hiring managers and job seekers that were never really available or viable because the macroeconomic conditions or the availability of supply and demand of talent just was not at an equilibrium that allowed for rapid investment in either contract to hire or full-time. And we're there now. We're there now. We have a really robust ecosystem of talent, and people can look at all sorts of different modalities, whether it's I want to live a gig economy or I want to be a company woman and just, embed myself for 20 years. All of that is sort of now possible, whereas before there were really just full-time jobs for many years. And then finally, we're going to talk about what motivates job seekers. We talk to hundreds of privacy professionals a week. They all tell us the first question we ask anybody when they interview with us is, why are you interested in exploring the job market? What's motivating you? And we are, conglomerating all of those trends as to what's bringing people to the market so that job seekers and hiring managers can understand the thinking behind the job seekers who are out there looking for work. I'll pause for a second in case there's any immediate questions. I always like to sprinkle some of our overview with some fun stats that hopefully set the tone for the kinds of things we'll talk about over the course of the next several months.
One of the questions is about AI. I know we're going to get into that, so I let them know that that'll be a good question to come back to because we may answer that.
Please make sure you're using the chat box, and if we don't get to your question during the course, we'll come to it at the end. But I think for this inaugural episode, we're going to do trends of what last year looked like and predictions of what this upcoming year is going to look like. So Jared, let's launch into some of the trends from 2023 of the job market.
100%. So this dovetails nicely into that last metric we just discussed, which is what motivates job seekers. And in 2022, and just as a point of reference, in 2021, the number one motivator for data privacy job seekers was wanting to work remotely from home. Now, that may mean that they had a hybrid job 3 days a week and they wanted to be fully remote. It may mean that they were fully in office 5 days a week and wanted to be hybrid. But what was motivating people, and this is like more than 50% of people, well more, is that they wanted more time at home than their current employer was allowing or permitting. And a lot of that was because of change in policies. And so this was the number one thing driving people to change jobs. So the guidance we give hiring managers is, of course, if you change your in-office requirements, you should immediately be prepared for attrition, right? That is the number one way to get people to start putting their resume out there, is to change the in-office requirements from less work from home, from more work from home to less work from home and more in office. 92% of the offers accepted. I'm sorry, go ahead, Jess.
Yeah, Jared, I know we're going to pontificate in a moment about predictions, but I don't think we're going to pontificate on this one. Do you expect that remote work is going to remain a top motivator?
No. And I'll explain why. In Q4 of last year, burnout wasn't even in our top 5 list until Q4 of last year. And burnout became, in Q4 alone, the number one reason why people were reaching out to us, more than working remotely from home. It just didn't outweigh the 3 months prior and the additional accumulation of people wanting to work remotely from home, which was kind of number 2, I would imagine, in Q4. But burnout rose so fast in Q4 and is now rising so fast as a motivator in Q1 of this year that we anticipate that burnout will be the number one reason why privacy professionals are coming to market. Why, Jared? Why burnout? Well, we saw probably north of 1,000 less open jobs in 2023 for data privacy available than we did in 2022. And there was a lot less hiring. When there's a lot less hiring year over year, that work gets put on the people who are there. If it doesn't get outsourced to a contractor, when a company doesn't have headcount, a lot of people didn't get headcount last year, or a lot of people got headcount and couldn't fill it with the budget they were allocated based on the caliber of talent that they desired. So a lot of what happened in 2022 is we want this, we're willing to pay this, and so the jobs just stay unfilled. And job seekers stay in the jobs that they're looking to leave a lot longer than they did in 21 and 22, where there was so much more opportunity. So as that happens and there's less movement and less jobs available and less add to staff and less growth, there is increased burnout. It is just an algorithm, right? And that increased burnout is accelerating as people continue to not approve headcount. You know, for years, I think the conversation in the privacy community was, we have a supply problem. We have a supply problem. There's all this demand and there's not enough supply. How do we get people interested in our industry? I'm here to tell you, we do not have a supply problem, ladies and gentlemen. We have a demand problem. And we need to shift the focus as a community back to, how do we get the budget and buy-in to add to staff to increase our human capital investment in our privacy program, because we so desperately need it. Look, according to the E&Y IAPP survey that was done less than 6 months ago, 62% of privacy programs said, and this is in 2022, said that they were understaffed and didn't have the human resources necessary to execute all the agendas of the program. This is 22, right? 23 got worse for everybody. So my guess is, if I probably surveyed, 100 of my customers, I would probably guess that 95% would say that they were understaffed right now. So prepare for burnout to be a real issue and a real motivator for job seekers in the following year.
Great, thank you.
Yeah. Going ahead to other big trends, 92% of offers accepted require only 3 or fewer days a week in an office. So this is what we like to call the new norm. So if you are requiring 4 to 5 days a week, you are an outlier, which means your candidate pool of available talent will be significantly less than if you are 3 days or less. Now, if you shift it down to 2 days, we find that your candidate pool increases by 50%. So if you saw 13 candidates, and that wasn't enough with a 3-day requirement, and you drop it to 2, now you're going to see 20 to 25. just based on more people being interested because it's 1 day less a week in an office. That's how meaningful that flexibility is to the job seeking community right now.
Do you think that, oh, sorry, Jaren.
Please.
Do you think that that is specific to corporate versus firm opportunities versus consulting firms? Is that industry, privacy industry specific, or, can you tell us more about that?
Yeah, it's a great question. And let me answer it by saying this. That's a conglomerate of all the work we do and all that work that we do or that we're tracking that other people accept offers that aren't through us, which is included in these metrics, are mostly corporations. But that's mostly because that's where the jobs are, right? In a down economy, you see consulting firms, software companies in particular, having mass layoffs and having hiring freezes that in some ways have been more aggressive and impactful than what we've seen in the corporate sector. But yes, those in-office requirements are generally corporate jobs, but that's where most of the jobs are in privacy. Our other main core business is cybersecurity and e-discovery. And in e-discovery, 80% of the jobs are in law firms and vendors, or software companies, which tend to be billable jobs, which tend to be a lot more flexible, right, and voluminous, and have less issue getting headcount budget because those people pay for themselves. But when you're in-house at corporate, which are the other 10% are in e-discovery, and where 80% of the jobs are in data privacy, in-house corporate, you're a cost center. So the ability to get headcount is about budget, it's about advocacy, it's about buy-in, it's about being able to evangelize all the things that put value on privacy above and beyond revenue generation. And that can be a challenging argument to make in a down economy. I think a lot of hiring managers are struggling with getting the amount they need to either hire the people they want or achieve the goals that are laid out ahead of them.
Thank you.
But the way that they're getting around that is with contractors. And as you can see, it was almost 50-50 in 2023, with 48% of contracts placements being contract or contract hire and 52% being FTEs. And what we believe will happen this year is that 60% or more of the jobs where people actually accept a new job are going to be contract or contract to hire positions. And one of the most amazing stats, and this is the highest we've ever seen, this next stat, in any year we've ever done business, and we've been around for almost 15 years, 25% of our contractors that began assignments in the calendar year of 23 were offered direct hire conversions within the year, and 95% of them accepted. That's nuts. I mean, first of all, that many people would get hired as contractors and then flip, and that many would say, yes, I want to flip, is also unusual. It shows you just how many people were either unemployed or were willing to take a risk to leave a full-time job to go into a contract that would move their career in a direction or up a level because that's what was available. Full-time was not available, and it worked for them. It worked. The gamble for both the hiring manager and the job seeker paid off because they wanted each other. They wanted it to be permanent. And so for those of you that are out there saying, oh, I would never think of taking a contract job and leaving my full-time job, it worked out 95% of the time. And not all those people were gainfully employed, but I can assure you not all those people were out of work. Being a contractor in privacy does not mean you are unemployed. It is a choice. And it is a choice that hiring managers are choosing almost 50% of the time as the way in which they onboard talent, particularly in a down economy. Now, we do think that will change in 25 and 26 as we go through another 2-year swing where FTE hiring exceeds contracting, but we're not there yet. And the business we've transacted in the last 2 months certainly points to that. I mean, it's more, I'll be very honest, more than 60% of the placements we're making in the last 2 months, January and February, in data privacy are contractors, much more. 75% of job seekers accepted the first offer they received in 2023. And that goes back to what we said. For the first 2 quarters, it was 80%. And then we started seeing the job market get a little bit more competitive and things pick up at the end of the 3rd and throughout the 4th quarter of 2023. And people started getting more than 1 offer or more than 2 offers. And so we started seeing that eke back. The statistic for Q4 of 2023 was actually 65%. And so that's what brought it down from 80 to 75 for a year-end total of 75% accepting the first offer they received. So if you extend an offer and you're the first, you have a 3 out of 4 chance they're going to say yes from a mathematical perspective, as we've seen. And this is taken from hundreds and hundreds of offers extended and accepted.
One of the questions coming in, Jared, about the contractors is if rates have changed similarly to the way salaries have changed going from 22 to 23, and like what you think about that going into 24.
Yeah, our rates haven't changed, meaning we have not seen clients push back on rates being lower than what they were in 22 and 21 for contractors, right? What is not happening is customers coming to us saying, hey, I know I paid X in 21 and 22, but I need to pay 30% less for the same person. And we don't see that happening. What we see happening more often is full-time hires getting riffed and contractors being hired more. Well, why? Well, because full-time hires hit the bottom line P&L of a business, particularly a publicly traded one, differently than an outsourced third-party contractor. And so if you're looking to create more profitability in your organization, one way is to cut perpetual headcount, which are direct full-time hires. And that strategy worked really well for a lot of big tech over the last 18 months. I really feel like the catalyst was Zuckerberg laying off people at Meta in October or November of 2022, and then everybody followed suit. Well, look at how Facebook stock is doing now. It's trading at around 80 in Q4 of 2022, and now it's pushing up close to 500. So there's logic behind this. It may not always be the most humane way we want our careers being managed, but it is leading to very identifiable trends in what to expect when you're approaching the job market.
So we talked about backward looking in the year in reverse. Let's forward looking and get out the crystal ball about what to expect this year.
Yeah, 3 days or fewer is the new normal. So anything more than that is going to be a struggle and will both make your candidate pool diminish and the timeline for your hire extend. Those things, again, are algorithmic things, right? More days in an office, less candidates to choose from, longer the job search takes. Contract and contract to hire staffing will eclipse a direct hire FTE hiring. We've sort of covered that too. We think there'll be a lot more contractors hired into jobs this year. But hopefully, if your intent and goal is to get converted, 1 out of 4 got converted last year, which is a really high rate. External opportunities are going to be limited for chief privacy officers. We saw very few CPO jobs available in 2023, certainly minuscule compared to what was available in 18 through 22. Even in the pandemic year of 2020, we had a lot more search, quite frankly, than we did last year. I think there was a lot of cutting at the top. There was a lot of holding the line at the top. There was also a lot of what is this role going to be in the future, which we'll talk about in a second, as more CPOs got involved in AI. Our guidance to chief privacy officers is be prepared, but be patient. And what we mean by that is when opportunities come up for the elites of our community, you want to be ready to move on that job if you're seriously considering a job move, right? Because if you don't, your peers are going to. Competition is going to be a lot more extreme at the top of the market for the rest of 2024 until we see new jobs. And I don't mean new roles for CPOs. I mean new jobs that don't even exist right now in the corporate ecosystem becoming jobs that CPOs move into, most likely not through an external acquisition, but through an internal promotion. Downstream privacy task-oriented work will provide voluminous contract opportunities. And what do we mean by that? Let's go to the 5th prediction, because it's all going to kind of tie in together. AI jobs will begin to codify. I know everybody's talking about AI. I know there's burnout on the topic. But what there's not burnout, at least for us, is talking about how AI is going to impact the job market. That has not codified yet. There's not clear evidence or guidance to provide yet. And this year will be the year that we begin to be able to say, okay, in 2025, this is the kind of jobs we can expect. And these 3 predictions are sort of tied together, and I'll explain what I mean. For those of you, and I'm going to date myself now, that remember trickle-down economics, we are in a period of trickle-down economics in data privacy in the job market. And what I mean by that is we've been talking to all of our chief privacy officers, and this is people in the Fortune 1000 and beyond. The average amount of time that a chief privacy officer is now spending dealing with AI, whether it's exploratory, consultative, operational, whatever, is about 20 to 30%. So CPOs are taking 20 to 30% of the time that they spent and are now committing it to something that was not in their job description in 2021 and probably most of 2022. The AI revolution really started in Q4 of 2022, right? So what do they no longer have the bandwidth to do because they started doing all that stuff? Right? I know most people are like, well, what's the stuff that they're doing? But it's different for everybody. And that's what this year will help codify is, what do those new AI jobs look like? I know someone had a question about this. What are those new skills that you need to learn? And if you're really interested in that, come to our session at GPS, at the IAPP GPS conference. We're going to do a whole session with the CPO of Reddit, Yuta Williams, who's a genius and has worked at Meta and Google and Twitter when it was still Twitter. And we're going to unpack the practical skills that you need to get, that will be desired by employers, and where to go get them on that session. So if you're interested in that, tune in for that. But in the meantime, those responsibilities will come down to a deputy or a program director, and then they will have 20% of their job or 30% of their job that they no longer have the bandwidth to do. And then those will fall onto a program manager or an engineer or an analyst or a lawyer or someone else in the program. And then they won't have time to do 20%. And then those skills will funnel. So what's left? What are those task-oriented privacy skills? And the trends that we're seeing are like DPA overflow. We need someone to manage our ROPA. We need someone to build us or run our DSAR or revise our DSAR program. We need someone to own all our privacy impact assessments. These things that can become great opportunities for people who are becoming privacy specialists in a certain area to come, or we're doing PII breach review, right, is one we see a lot as well. To just come in and do that and then get out of the way, or come in and do that, fall in love with their employer fall in love with them, and then have vertical mobility up the ecosystem created for them. But because we're not seeing the amount of jobs needed to grow privacy programs organically, horizontally, we're going to need to see CPOs move up, relinquish some responsibility, cause these people to relinquish, and then it's a trickle-down effect. That's where there's going to be lots of contract opportunity. We're already seeing it, particularly in the very large companies that are very cost conscious right now.
And if people are getting certifications for these, like this sounds like a good point of entry, right? So like different certifications depending on their background would also help to break in, right, Jared? Or what are your recommendations?
I mean, look, I'm not going to say that right now because I couldn't tell you what certs are going to assure you a job, right? Yeah. What I can tell you right now is that the IAPP has a bit of a hold on what the general hiring manager public is finding credible and valuable in terms of certifications. So right now, like those are still for getting a job, the most valuable certs that you can go get. They are. Yeah, until we have codification of what hiring managers actually want, you know, it's not one thing or the other. It's probably more like, you know, a series of different cosmetics that add up to make the face of AI. That was my like original Batman sort of Joker metaphor there. We only have two more minutes. Yeah, we can go over a little bit.
Let's dip, because one of our biggest trends is contract staffing is going to be huge. So walk us through this briefly.
So you could see here that the only year where contract staffing eclipsed full-time hires was in 2020. And that makes a lot of sense, right? Like we had 9 months of uncertainty. The unemployment was at 15%. Lots of people were out of work. Nobody knew if they would get headcount. If they needed something, they got contractors. And so contracting exploded to 60%. But if you go back to 2017, that was not the case. And it only increased in terms of demand for contractors. And this is actually based on people accepting offers, not searches, not what people said they wanted, but actual people that accepted positions, right? That went up a lot around GDPR prep time, right? So the 18 months leading into May of 2018, we saw a lot more contractors for the first time getting hired because everyone was scrambling to get ready for GDPR. And a lot of that were at consulting firms, not corporations. Well, that nosedived in 19 as corporate programs had lots of budget and lots of buy-in to grow their programs, and full-time hiring hit an all-time high based on this temporal timeline. Then after the pandemic, things kind of flip immediately and everybody's making more money. Stocks are surging. Valuations of company are higher than ever. We had 2 of the most voluminous years of IPOs in the history of America. And so people were hiring a lot more direct hire privacy people. Flash forward into 2023, and we start to see that equal out. And really in 2022, if I take out Q4, that probably looks more like 75-25. But because in Q4 there was so many layoffs and the NASDAQ tanked so significantly, right? We're talking like 40%, that we saw a huge uptick in hiring contractors headed into 2023 from Q4. And then, here we are at, an almost 50-50 marketplace. So this is just to show everybody supply, demand, and how certain moments in time in history, particularly macroeconomic or regulatory events, impact how people hire direct versus contract.
Excellent. Excellent. And as we wrap up, tell us who your next guest is.
So if you don't know Deb Farber, she's amazing. She has the best podcast in data privacy, in my opinion, Shifting Privacy Left. So if you're an engineer and you don't listen to her podcast, you should. I've been a guest on her show, and now she will be the host on our show. So Deb will be joining us next month, and we'll dig in on some engineering specific curiosities that I know she has, and provide a whole lot more metrics on offer acceptance ratio and speed of hire and all the other stuff we talked about today.
Fantastic. We're at the half hour, but I think we've wrapped up most of the questions. Sarah, were there any lingering questions out there?
Some questions about career transitions and things that probably take some time. I've tried to answer some of them and have, let people know that they can reach out to us with some one-off kinds of questions. But a lot about transitioning into privacy as a career. So excited to have those people reach out to myself or Jess with any, questions like that. We'd love to chat with you about it.
I'll give everybody one piece of advice on that topic, and it's not what you know, it's who you know. And that's not a plug necessarily for us and our agency, because the reality is we are much more likely, if you're an entry-level privacy person, we're much more likely to give you great guidance and help you find a way to break in, but not be the ones that wind up getting you that job. Because you have to remember, people aren't necessarily coming to an experienced agency for unexperienced talent. Right? They're generally looking for us to come and deliver people to them that have experience in the industry and are as plug and play as possible. Now, having said that, there are exceptions, so don't be afraid to come to us, but get to know us so we can provide you guidance, because the reality is we become really valuable to you when you're ready to make your next move and your next move and your next move, your second, your third, your fourth, your sixth, and however many more you may have in your career. We become infinitely more valuable to you to actually facilitate the move. But we have lots of collateral and lots of wisdom to provide entry-level job seekers about the best way to do it. And the best way to do it is to start making friends.
Fantastic. Well, thank you, everyone. Sarah, why don't you wrap us up?
No, this was so amazing. Thank you all for coming. We're excited that, about our inaugural kickoff. We've gotten a lot of great feedback already. People have been asking us to make this 45 minutes or an hour. So we'll take that under advisement, but come back next month and we'll continue to have some more.
You gotta leave them wanting more, Sarah.
Exactly. That's what I said.
Leave them wanting more.
I'm just giving you what the people are telling me to give you, okay?
No, it's not my first rodeo.
Awesome. Thank you, everyone. And thank you, Jared and Sarah.
Thank you, Jess. Thanks, Jared.
Thanks, everyone.